All right, even with everybody only talking about politics, there was something exciting in tech investing world. General Catalyst announced they'd raised an $8 billion fund, which is insane given this is the era of downturn and small VCs calling it quits. Were you surprised?
I guess not surprised with GCs, since they've kind of landed in camp of the haves versus the have-nots. They're saying that that's much more like a company than a fund, right? You chatted with Hemant, right, Eric, about this?
Yeah, I once called him the secret CEO of General Catalyst, and then they made him
I think
CEO
he took your
like
branding
a year later.
pretty seriously.
Yeah, exactly. And so, yeah, I got on the phone with him right after they announced the 8 billion. And, it was interesting. I mean, he doesn't want, they're not purely a venture capital firm, though certainly they have venture funds. He doesn't want them to be seen as a private equity firm. I understand the logic there. The logic being that most of what private equity firms do is sort of come in, cut headcount, find cash flows, and GC is still very much in the creating and growing sort of new businesses.
Well, they've incubated around 1.5 billion of this new fundraise to, creating new startups, right? Or in sort of the incubation early stage phase. Yeah. So not really what private equity does, but they did purchase a hospital, which is a lot of what private equity does, right?
And private equity well understands that you raise a lot of money, you get a lot of management fees, and sure, you need good returns because that's what gets the new limited partners to come back. But at the end of the day, you're making money on management fees. And clearly firms like Andreessen and General Catalyst and Lightspeed sort of see the AUM game, assets under management game, whether they, they don't want to admit it. So anyway, I pushed him on a little bit on that.
Well, they have, some investments in some of these, really major banner companies from past waves and this current wave. I mean, they've invested in Mistral, Stripe, which, has been in the news quite a bit recently as well.
Right. He said they invested 14 times since 2010. I mean, definitely his ability. I think they were in Snap, they were in Airbnb. Yeah, they've gotten in some of these key deals and doubled down. So that certainly helped make the firm. I mean, I just think it's interesting that in sort of a time of fear, limited partners are going to the big firms. On the one hand, that seems like totally intuitive. It's like if you're pulling back, where do you keep your money? You keep them with the giants who have done well for you.
It's the flight to quality argument, right?
Exactly. The other side of that would be just a lot of the best performing funds are early funds. So you sort of want to make a bunch of early bets, and it feels much more in the spirit of Silicon Valley to keep betting on a new generation. But now we're sort of entering this era where it feels like they're going to be these brands with so much money that they have sort of unlimited staying power. We were mentioning Stripe came up in the news this week with their decision to acquire stablecoin company Bridge for $1.1 billion. Madeline,
yes.
you wrote about that deal.
I did.
What stood out to you?
The 1.1 billion acquisition of Bridge. Well, one, it's a very welcome exit for VCs at this time with, the M&A market more shut and IPOs fully closed out. People are very happy that there's
it felt like, deal happened. It felt like 2016 or something to have venture capitalists thumping their chests so aggressively for a $1.1 billion deal. I mean, it's good.
Hey, we'll take what we can get right now.
Not the decacorn exits that many of these firms have been pining for with their massive funds. But yeah, it's a good exit.
It's also the largest crypto startup acquisition by a payments company ever. So in the sort of world of crypto companies playing either outside or inside within the traditional fintech markets, it's a bet that this is an area that's going to stick around. Crypto VCs and the crypto community obviously have a lot to be happy about with this deal. The other thing I think that we reported on a little bit too is that it's a really big win for Sequoia as well, because they've been in this deal I think since the Series A and have invested.
Sean McGuire, and then they led
the only board
Series
member that's
A,
not a founder as well,
right?
Too.
Okay, so yeah, a big win for Sequoia. Proof that we will not take our Trump haterade and we'll still celebrate your wins, even if you were like Sean, insane manic Trump supporter on Twitter. Yes,
it's a good exit.
Congratulate you. So big win for Sequoia. Ribbit, a big investor. Index.
Han Ventures as well.
Yeah, Chris Han, I think, invested at Index, and then he moved over to Han, and they invested. What you said, it was a 90x revenue multiple, though. Pretty crazy for what's supposed to be a tough time in fintech, especially.
Right. Absolutely. I mean, the last reported measure of their revenue was around 12 million, although they are growing really rapidly, sources are telling me. So, I mean, there's potential there. But yeah, it's pretty shocking multiple. It's kind of reminds me of some of these AI deals, except it's, an exit. Congratulations on a great exit. We're happy to see it in this time.
Sean did make the point, which I appreciated. This Sequoia has like a history of companies selling and then going on to do well, right? I think he cited YouTube. I mean, WhatsApp. So I do think, you build a good brand with acquirers if you're like, these companies perform afterwards. And I do think Stripe is very serious about taking what Bridge has built and implementing it in their business.